Eric Muadh, Muadh.com, with another mentorship video, one-on-one coaching here, and we are looking at the S&P 500. This is after 1 day of trading for the first session of June 2015. Now I just want to discuss here short-term trading, even though I don't encourage it because it's very rough and markets do move, especially when things get volatile. They move up and down in such big and fast-paced big movements that it's very hard to predict which way they're gonna go. So personally, given a choice, if you can play the trend and hold for multiple weeks, multiple months, sometimes the trend is there to be had, instead of trying to guess each tiny minute turn and twist and turn in the market. So this video is going to be taking a look at short-term views on the hourly and also on the minute chart, and I won't keep you long. So we begin by taking a look at the monthly. Why do I start with the monthly? Before you go to the smaller time frame, it always makes sense to get sense of the big picture, and the big picture here is unquestionably bullish. We broke out at the end of last month. We closed above the prior monthly closing high, so that was a fresh breakout, and as long as this month is positive, this market should continue to be bullish. And as long as the monthly RSI is above 69.1, again, the market should be bullish. So that's the long-term picture. If we take a look at the weekly for the SPX, we can see that on the weekly, as long as market, for example, is holding above the 10-week moving average, as an example, the market should be okay. And I'm trying to figure out how to use the short-term charts, but before I do, I need to get a sense of the big picture. And we can see here, generally speaking, we've been in a nice steady market. At some point it could correct, but we don't know when. So if you're trading this short-term, we've seen that from the monthly things are good, from the weekly they're stable to good. Let's take a look at the daily for the SPX as an example. And on the daily, we see a couple of things. We are holding the 50-day moving average. Generally, we are trading and coming to that contact and holding, so that's good support. On the RSI, something we've been talking about is this line connecting recent RSI lows, and quite simply, as long as the market has not violated this line, we have to assume that the market is just pulling back from a nice upward momentum, and it seems to me like to be your ordinary pullback before an attempt at new highs, and that can only remain true as long as this daily RSI support line on the RSI line is holding. So if this holds, markets are good. If this breaks, then and only then can we start looking at the small short-term time frame for sell signals. Now, because we haven't really seen the break, we have to assume that what we see is what is, and play, more than likely look for breakouts or try and see whether we can get the market on a pullback. So we go to the next time frame. From the daily, we go to the hourly. On the hourly, I'll go to the RSI for direction, because on the RSI we can see a simple straight line connecting the lows. Here is where the market bounced late last week. We've come close. Actually, we haven't even come back to the line. So we've already seen support short term. And if you go back a couple days, a couple weeks, we see that there was resistance that brought the market off the highs. So we can say that based on this chart, we are trading within two lines. Line number one is a topside line where the market has been showing resistance recently, and on the downside we have support. And since the market is trading between those two lines, it is tough to tell which way it's trying to go. So we are neither at resistance or breakout, and we are neither at support or breakdown. So this is sideways action. We can't really get a lot of direction from this chart, but we can look at the MACDs. And on the MACD, again, the settings, I use two MACDs. One of them is a little bit faster, and the other one is the default MACD on most charts. Generally speaking, for momentum to take place in a stock, you'd like both MACDs to be trading above zero. Right now we only have one of them. The other one looks like it could very easily jump above zero, or it could very easily, let's be fair, also it might stall to hold the zero line here. And so above zero is bullish, below zero and resistance at zero is bearish, and at least one of them is above zero. If this market is to bounce and bounce hard, both MACDs are gonna need to be above zero. Alright, so that's the the hourly chart, excuse me. Let's take a look at the hour or the 30-minute chart, and here we see signs of a short-term resistance. If you take the top side price channel, I guess we can do it like that, we can see resistance here, or the last hour of trading. We also see that that corresponds, you see this big drop in the market here. This big drop began because the RSI broke down somewhere here. So that this drop that began here, this huge drop, began with this RSI break. As you can see, it corresponds with this period here. And so we can draw a line from here, which happens to be around the 50 line, like that. So let me put that in red because that's a sell signal. And if we draw a line like that, you can see that since then we've been finding resistance on the red line around the 50 and pulling back, which is this level here. And again we did the same thing here. So let's draw that again because it's kind of hard to see. So the line is around the 50, somewhere there, and this line corresponds with this break, which corresponds with this break and a move lower. We can see uniform activity above the line and back below it, which happens to be again this top, and slight resistance here for this short-term high, and again over the last hour here. So on a 30-minute chart, this is indicating a pullback is already taking place, and so we'll see which way the market goes. So if you are, let's call it a day trader or a scalper, you are trying to scalp in and out of positions, this would have given you a sell signal coming into the last half hour, the last hour of trading for this for today's session. Otherwise, that's what it's telling us. We also see that you can draw a line connecting the highs like that, and this line connects the tops, this resistance level, and where it stalled coming into the last hour. So that pullback makes sense. Now remember, I'm not encouraging anybody to day trade or to, it's very tough because it means in and out in such quick decision making is needed, and sometimes the market can just move down for a couple of points and change direction. So it's very tough. I would rather play the bigger picture trend line. But then again, just to finish here, if we take a look at the minute charts, we can see that the minute charts, couple of things. Number one, you see this big drop here, just to so this is a, by the way, this is RSI period of 21, and I'm using so 21 period RSI. Okay, so keep note of that, and it's a 5-minute, I believe a 10-day moving 5-minute, let's get that right, 5-minute, 10 days worth of data. I believe that's how I've set up 10 days. Alright, so that's how it is. Now a couple of things. If we go back to this break level short term in this 5-minute chart, there was a break. This break in the RSI led to this drop. We haven't been back to that level since. If we draw a straight line from that break like that, we can see resistance, which is this high. We can see we came close here for another resistance level, and over the last day session, which is today, we did not move above that line. In fact, it became resistance for the highs of the day. So the pullback into the last hour of the day made a lot of sense. So if you are a day trader, and trying to find in and out situations, you can see that clearly using the resistance level here gave you the top there, resistance here gave you the top, and resistance here gave you a short-term top if you're looking for reasons to go short the market minute to minute. Now, one way you can test whether a line you're drawing is legit, and I call this a uniformity line, because once we get the line drawn, any type of uniform action to the line with the resistance is showing that there's a reversal. So the one way you can test a line of uniformity is by going backwards, and I'll show what I mean. If I go backwards into time, because your analysis should also make sense going backwards, just like you're trying for it to make sense when you're moving forward in time. All right, and time being a construct, it's just an idea. It's not, there's no such thing as time, but we won't get into that kind of stuff. But we see here that on going backwards, it should make sense, and also going forwards, and your best technical analysis should make sense in either direction. So by testing this line here going backwards, we can see that there is uniform activity at this point above the red line and back below it, which interestingly happens to be the high. So we know that that red line is legit. So that's why if you are really looking to find reasons to play this market short term, and I'm talking very quick in and out type of situation, is this line has been legit, and you can see the results ever since the break here. It's been giving you nice sell signals as far as market pullback minute to minute is concerned here. All right, hope that makes sense. All right, now if we take a look at, by the way, when we were back testing this line, there's a couple of other things I would like to point out. So we know that there's uniform activity above the line, back below it for that short-term high, and even here it touched the red line and there was a pullback. So we know that the line is legit. That's why we can use it after we get this break. We can use the line in future sell signals here, because the line, when we tested on going backwards, it gave us critical prior sell signals. Okay, now that's the sell signal side. Now I want to show you another view. You see this nice move in the SPX over here. This move began somewhere here on hindsight, so we can figure out where that happened. You can see that that is corresponding with the RSI move here. This movement in the RSI corresponds with a nice entry here. If you bought the markets there, you had a chance to ride the market higher. Since then, it's been generally above that level. All right, so we can draw a line from there, and the line should be something like that. Oh, by the way, before I do that, I just want to show you that on the highs of today, and the market did have a pullback, I want to show you that there was another line that I didn't speak, connecting the highs like that. So it connects the RSI highs here, 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 and here, and it also corresponds with the high during this high before the pullback. So we had two lines showing resistance, this line and also that line. Keep in mind, we are using the 5-minute 21 period RSI. So now let's go back to our analysis on the buy signal side of things. Entry here, which is this entry, we can draw a line from here. Remember, this corresponds nicely with the RSI moving out of a range here. Since then, this has been giving double bottom uniform activity to the line and back above it for entry somewhere here for a slight move higher. Again, we see what looks like a little bit of a shaky double bottom, or a V-type formation, or a U-type formation for this short-term lows, and again here for these short-term lows. Uniform activity here for short-term lows. Market has come back to that level. If at the beginning of the next day it can bounce, then that would be where you start building to the upside. Also, it corresponds with another line connecting the lows on the 5-minute bar like that. So it connects this low this low, and this low. If those two lines support the RSI on the 5-minute chart, going into tomorrow's session, I would probably predict that the market wants to bounce. So that could be a reason for the market to hold here, which also corresponds with this RSI line there. So the stock, or the SPX, ended exactly with its RSI there. It would make sense if it bounces here for this to push higher and for prices to be a short-term buy. Otherwise, if we break below those two lines, then one can expect market to continue trading lower. So really, in this video, what I was trying to do is, remember, because the bigger time frames are bullish, being the monthly and the weekly, we are looking for any reason to go along the market. And if you're looking for any reason, this here is a good reason, because you're trading in a bullish phase on the long-term pictures. You are better off trying to find spots in the market where you can pick your entry and get a little bit of a discounted price entry. So that's why I'm saying yes, the market could be pulling back, but we're within a bigger construct of a bullish market. So pullbacks are to be bought, and you can use the hourly, 30-minute and 5-minute charts to try and figure out where you can add on to your position, especially if you're a short-term trader. Eric Mwathe with Mwathe.com. Good luck, peace, and blessings. Woo! Yeah.